Hi, everyone. Welcome to A View from the Floor here at the New York Stock Exchange. I am joined by Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. So great to have you. It has been some wild times right now at the stock market with this tariff-fueled chaos. What is your perspective on everything right now, Jonathan, and where do you see this seesaw market turmoil going?
All right, so unfortunately, I think what we've seen, we're going to continue to see for quite some time. This market is very data dependent and information dependent. So anytime we get a headline that we're yearning for, we're looking for, this market needs and wants, our market continues to fluctuate off of that and we continue to be very, very volatile. We're going to continue to see that, right? Because we can see conflicting headlines that kind of came out over the weekend. We're in this 90-day pause, so we're, 83 days away from wherever that's going to wind up. We're going to get a lot of information coming out from there, and it's going to switch back and forth. So I think what we've seen, we're going to continue to see. Good news is, at this point, we're starting to embrace where we are, and the market is holding its place, right? The fear of this sell-off continuing has somewhat subsided for today, right? Any headline, any tweet can change that at any point. We see the VIX coming down, trading in the low 30s, which it's hard for me to say that I'm comfortable where that is at this point. Really, we like the 15 to 20 range. But as we continue to navigate through this, it's going to take us some time to really get through and embrace where we're at. I think longer term, overall, bigger picture, this is just a blip in the radar. Look at a long chart of the S&P over 20 years. You're going to see certain points in that calendar where we've had pretty significant market moves and pretty significant global events. The market always rebounds from that. It always finds its spot. So we are going to have to get through this, even though it is somewhat uncharted waters.
Well, the tech tariffs have been making big headlines because Trump has been going back and forth when it comes to these tech tariffs and the tax exemptions here, the tariff exemptions here rather, and involving China. Where do you see this scenario playing out?
Right. So this is a big flex going back and forth. I guess it's part of the negotiations. We did get a headline, I believe on Thursday or Friday last week, that there was potential for a U.S.-China call, which would be very positive. But the tech sector is so reliant upon outsourcing their manufacturing, and we've got China and Taiwan and Philippines and different places, and a implementation of tariffs is clearly going to have an effect on the merchant, right, as it trickles down to the consumer and what we're paying for our goods and products. So we're going to continue to see this back and forth. That's not going to get solved rather quickly. I think it's going to take a lot of time for us to get through it, but clearly the tech sector is just so heavily dependent on that, and it's going to be impacted on every single headline that we've seen. Tech sector has gotten hit pretty hard. We've seen a rebound in it. I think that's one area that we sometimes have seen not a flight to safety, but a sector that does yield significant returns. We've seen money come out of that, kind of shift to a little bit more safer areas, but back in turn, we'll probably get that cycle back on again.
What other areas should investors look out for then?
Yeah, I think you're looking at, whether if you're kind of timing the market or investing in the market, I think if you see certain areas that now I think have potential to it. We're getting through banking earnings. Banking earnings have been positive. Across the board, whether it's financials or any other sector, we're going to hear the same rhetoric coming out of the conference calls of uncharted territory moving forward, interest rates, geopolitical concerns, turbulence in the economy, right? So we're going to hear that, but we kind of have to put that noise aside and look at how these companies have been performing in the past quarter. I think from the financial sector, they've performed well in the last quarter due to trend in market activity. We're going to continue to see that. The syndicate calendar for financial stocks have been quiet. We were expecting it to pick up in second quarter of 25. That's been pushed down the road a little bit, so that revenue will eventually come into play. So I think financials are good. I also think real estate has performed somewhat well here, albeit mortgage rates are trading in that 6.5, 7 range. I think home buyers are starting to get a little bit more comfortable with that. The fact that interest rates at 2-3% might not have been the real pricing point where interest rates should have been at, and they're getting a little bit more comfortable with interest rates here. So I think those two sectors, financial and real estate, are ones to look at.
You touched upon earnings. Large financial firms are going to report their earnings this week. What do you make of all of this, and where do you see the projections this year?
I think there's so much uncertainty, right? Because this can really pivot and change at any given point. The big banks have performed very well, as I said, in the last quarter due to equity trading and activity. I don't think that is going to change. I think that's going to continue at least through the second quarter and third quarter, because with all that uncertainty of what's going on, it's going to spark a lot of market activity there. So I think that will help. But again, the key words that we heard out of Jamie Dimon, J.P. Morgan, of turbulence and uncertainty in our economy, that's true. That's there. We're talking about tariffs and all this. The other conversation is the Fed. What is the Fed going to do? How is the Fed going to react to current market activity? How are they going to react to the swings that we're seeing in the dollar and in the 10-year? The Fed is probably going to have to make a move sooner than later than what they wanted. We get a couple of Fed speakers tonight. We'll get some comments coming out of there. We've got FOMC coming up. So it's like all these different things kind of getting into the pot and mixed together. I think, again, tariffs is going to take a long time for us to play out. The Fed probably will have to make a move sooner than we've expected.
Jonathan, thank you so much for your input and joining us here on Asset TV. And now do it for me. I'm Michelle Yu at the New York Stock Exchange. We'll see you soon.